you're never really going to get that option again. Be able to not pay tax on 1.25 million or $2.5 million of gains ever.
Welcome to the Clinic Boss Show, everyone. Today we got a special guest. We got Shayan. He's a CPA and a founder for SRJ, right? Welcome to the show, buddy.
Appreciate it. Thank you for having me. Yeah, look forward to the talk.
Yeah, I'm curious, what type of practice owners do you typically work with? I know you work with chiropractors. Like, what else do you work with, right?
Yeah, we've had a lot of interesting, I guess, areas that we focus on. Our practice has always been related to healthcare and tech. So at the
Okay.
crossroads of those two industry groups. So within healthcare, like allied health professionals, multidisciplinary clinics, where we have, let's say, a chiro, physio, doing massage, there may be some medical doctors in there, some family doctors in there.
Okay.
And yeah, so there's always like a nice synergies in the clinics. Also, we have a big group of mental health practitioners, surgeons, dentists,
Okay.
other physicians. So yeah, so like we're across the board in terms of
That's
our
amazing.
clients. Yeah.
Yeah, I think your accounting bookkeeping firm specializes working with healthcare professionals, right? That's what I'm
Yeah,
hearing.
yeah,
Yeah.
100%. Yeah. So everyone from startup to growth focused clinics to exit as well. So we've built it so that we're facilitating all of that growth and the planning for the exit,
Yeah.
and then post exit life as well. So then our team is
Okay.
built so that we can take care of all of that.
You do a lot of strategic planning, exit planning, and then it sounds like also like what do you do with wealth, right? What do you do with your cash, right?
Yeah, yeah, exactly. So all that planning is done. It's not reactive. So a lot of people are coming in usually planning at the last minute, even accountants.
Okay.
So we always try to have a large number of meetings, with our clients when they first start each year, a couple of planning meetings, and want to make sure that's part of the process and it is not an afterthought. So we're always making sure that there is strategy, not just transactional tax returns being done. It's always high value strategy, and especially now because we're virtual, we're able to like spend a lot of extra time with our clients. A lot of
Yeah.
people like in person in meetings, sometimes it takes away from the value they can add. So we've done a great job, or the team has done a great job, just in terms of like always adding value. So that's always one of our core focuses.
Yeah, I love it. So if you look at all those healthcare professions, right, which ones are the most profitable? Which one has the highest? Well, because you're the ultimate guardian of truth, right? Because you do the tax returns, you see the monthly P&Ls. What is the most like profitable healthcare profession to be in, right? And the type of
So
clinics.
So yeah, in terms of clinics, multidisciplinary clinics can do really well. Like so with all the allied health professionals, and it depends on like what stage you're at too. Like for the dentists, they'll have like pretty good recurring profits, but their big exit comes when they sell the business, and that's like a large component of their wealth. For some of the like surgeons can do really well. Some of the specialists in the healthcare space.
What type of numbers? What type of profit margins do you typically see, you think?
So like it depends. Like the asset, let's say for like a surgeon or a doctor, like they are the asset, right? They don't need to have
True.
a huge clinic or anything, and especially if they're in Canada, but the government's paying them anyways, so
Yeah.
they get nice profit. So some of them can take home 500K a year. Some of them can take home closer to a mil a year
Okay.
without any issues.
It depends on how much OHIP billings they do, right?
Yeah, yeah, it depends. It depends
Or
on
MSB.
how aggressive they want to be on their billings, and
Yeah.
how hard they want to work. So you see, the younger physicians and dentists, obviously, they're putting a lot of time. They're willing to build up their practices, and
Yeah.
as the practitioners get older, they start to
Yeah.
minimize their time and just have more balance. But
What
it
about
depends on the
dentist?
stage.
What's the take home of a dentist? A typical dentist that owns a practice.
So if you're an associate, well, we can break it up between associates and practice owners.
Okay.
If you're an associate, we typically see between, let's say, 250 to 400, 450
Okay.
at a high end. That's a really high end for an associate. And then there's someone working at a practice who doesn't own the practice. It's a really busy practice. And then for someone who's building up a clinic from scratch, let's say, they typically can do anywhere from a few hundred K a year, take home profit to like 600, 700K a year. It really depends
Mm.
on the clinic and what area they're in and how competitive it is. But
Yeah.
yeah, there's definitely opportunities for them to build up some cash quickly and build that nest egg within the corp or within their holdco and start investing that and build that long term wealth.
Yeah.
And I always say there's like two or three different ways that are home runs in terms of like business owners, professionals that I've seen consistent, like where they can do it consistently. One is if you sell a tech company, you get a nice home
Mm.
run, but
Yeah.
not everyone can do that. And it's not repeatable. The second is if you're a healthcare professional, you can make a good annual income and then you can invest it and really build a nice nest egg that way. And the third, which is totally not related, is like land development and like commercial real estate development. If you have like small to mid-sized projects,
Yeah.
the good thing about that one, it's not like tech where it's repeatable. So if you're good at
Yeah.
the land development, I've seen a lot of people make a lot of good money from land development. Those are the
What's
three
interesting?
areas. Yeah.
Yeah, it's interesting. It's yeah, like one is obviously you could sell your business, and once again, if your business is a small practice, you're likely not gonna sell much for it. But if it's something that has recurring revenue, the EBITDA is good, like people are selling between, like I've seen sales happen between 3 to 9 times like your profits, right? Right, and
Yeah.
that's a nice
Yeah.
home run, so right.
Yeah.
But then the second one is the second thing that I think you talked about is that like I think all people would be should doing this. If your business is making you money, like you should be just taking that money to reinvest it into like you said, whether it's like real estate, like for me is I throw it into like the stock markets, right? Like with
Mhm.
something an ETF that is well balanced, and so you got cash flow that's kind of being built as
Yeah.
well as you build your cash flow in your business, right?
Yeah, 100%. And I think for professionals in Canada, especially, and like if you look at the US, there's other programs available, but we have our professional corps or any corporation. The tax rate's relatively low, right, on our first $500,000 of profits. So it's really a gift that like we have from the government to build up that cash flow, especially for not taking all that money out of the corporation.
Yeah.
So I always like push people to in the first few years of especially is like try to build up a small nest egg, try to get investing, and then when you sell, obviously you're trying to structure it for that tax-free sale using your lifetime capital gains exemption, which is huge, right? Because we get 1.25 million here in Canada, and US they have other options for that sale. So 1.25 million tax-free, you're never really going to get that option again, all right?
Yeah.
So if you can build up your clinic to at least that value or more, then you can multiply it, have your family members use theirs as well. So there's a
Mm.
ton of opportunity. And I think the other thing that people don't realize is if the practice you have is a brick and mortars location and you own the building, the sale of that building can also be used exempted through the capital gains exemption. So that's a huge blessing that we have. And like if you can get two
Oh,
quick,
really? I didn't
yeah,
know
yeah.
that.
So if the building
Okay.
is used in the active business,
Yeah.
we can potentially use the exemption on the building sale as well.
Oh, no way. For capital gains?
Yeah, yeah,
A
yeah.
percentage of it or all of it?
Generally, all of it. If you're using all of it, we
Okay.
can try to push it all through. Yeah. So there's different ways we can structure it. So
Okay.
yeah. So the building, if it's 100% used for that practice,
Okay.
and you're selling it together, let's say, you have like double the benefit there.
Okay.
Hmm.
Wow. And is it like, I guess without, actually, we should do a disclaimer. Like everything we're talking about on this show is not financial advice. You should talk to, an accountant or tax guys or lawyers and stuff, right? Everything we're doing on this show is about experiences of what we see and what we know, right? So,
Yeah, yeah, exactly. So these are, things we've seen in the past, we've done in the past. So each situation is going to be, specific for the individual. So you want everyone to like just make sure that they're planning on for with their own teams, their own accountants and lawyers.
yeah.
But there's a ton of opportunity out there. Like there's a major opportunity, especially if you're able to build like a strong practice. Man, you're never going to be able to like sell or not pay tax on 1.25 million or $2.5 million
Yeah, yeah.
of gains
Uh,
ever. So you got to really take advantage of that.
Yeah, and there's also like like and depending on your bigger practices, because like I told you earlier, we've helped sell $42 million of deals this year, and a lot of these bigger clinics that are being sold for 10 million, like they've set up like family trusts as well, so that if you got 3, 4 people within this family trust, each of them are eligible for that 1.25 like capital gains. So if you add it up, there's like $5, $6 million of there of capital gains exemption, right? So
Yeah, yeah, yeah. It's so necessary. Yeah, just to make sure you have the right planning because yeah, you don't want to
mm,
leave significant amounts of money on the table or worse, pay it to the government. So then
yeah,
if you'd rather keep it in your family and take advantage of all these tools. So Yeah, so it's
Yeah.
very typical structure that we can take advantage of, and we should. And then yeah, so like if with the clinic and the building, really it's unlimited. It's like every individual, husband, wife, kids, even you can add parents on. So if you can take advantage of the full exemptions for each person, it's phenomenal. It's a great opportunity.
Can you put your dog?
Unfortunately, not yet, but you never know. The way things are changing, definitions are changing all the time, so you never know.
You would never know, right? Never say no. And what type of so you talked about the take home for like a dentist, for an associate and also for a practice owner. Maybe look at from a chiro and a physical therapy side. What are typical take homes you see for a typical associate, and then maybe for a practice owner that that does $1 million of like revenue a year, right? What do you see
Yeah,
in that
yeah.
circumstance?
So for associates, it depends on what stage they're at. Let's say for a typical associate, they've been working for a handful of years. They're looking to take any like a Cairo associate might be doing anywhere from 100 to 200K, and it depends again how much they're working. But you
Yeah.
see a few that are above that as well, but that's generally for the associates. We see them in that range, and then um, for
Is
like
that
a
the
clinic.
same for physio too, or no?
Yeah, Physio's a little bit
Or a little
higher. Yeah,
less?
yeah,
Oh,
yeah. Yeah, a little bit higher. It just depends on where they're located in the country.
yeah.
But yeah, they're relatively doing the same thing. What I actually see is I see less physio associates. I see more of them as the business owners. So yeah, so there are quite a few that obviously are still associates, but we see that they're quicker for some reason to jump into owning the clinics, and which is yeah, it's great. It's a great business for them to be in, and a lot of function comes from them being in that role. But yeah, so the physios, I would say similar ranges, but I feel like they have a little bit easier time with their billings, and a lot of the clinic owners are more reliant on them. But it is a mixed bag. Yeah, there.
Okay, cool. And what type of profit margins are you seeing for a multidisciplinary practice doing $1 million? Is it like 10, 15%, or are you seeing like north of 15?
Yeah, I'm seeing, I would say 15 to 20. It depends on the clinic, how long they've been around. Obviously, in startup
Yeah,
stages, a little bit less.
yeah.
Yeah, but it's decent. Again, if we have, and I would preface this by saying, if the clinic owner is actively involved, obviously you're going to have better margins. But
Yeah.
as soon as we get an associate in and they're less hands-on, then the margins go down just because of that additional cost.
Yeah, yeah, it depends on your pricing too. I know this clinic in the West, I can't talk about it, but they charge $250 per session,
Yeah.
and they're billing three and a half. They billed $3.5 million last year. Like that was like their revenue. Like their profit margins were 25%. It was insane,
Wow, that's great.
right?
That's great. Yeah.
Yeah, and this reminds me of the heydays of the profit margins when I used to own clinics where we were getting 20 to 30%
Yeah.
profit margins. Like now, like when your margins are between 10 and 20, like you gotta do a lot of work to make the 10 20. Like there's no room for error.
Yeah, yeah, it's hard, and like especially if you're in bigger markets, like there's so much competition nowadays. But the good thing is like we see a lot of growth still, and then I think things are stabilizing now. Where after COVID there was a bit of a hit, and we're starting to see things stabilizing, and people are like back to normal. So yeah, so anyone who's like weathered the storm is starting to do well again, and like starting to make
What about the
decent
tariffs
income.
and Trump stuff?
Yeah, luckily it's not on physio and Cairo services, so we're okay.
Okay,
But yeah, so it hasn't impacted too much.
unless you're out in Windsor, right?
Everyone wins, you're in trouble regardless. Yeah. So
And
yeah.
is
So
that
for the
something
most
you've
part, I would
seen
see
over the
that.
years? Because I know a lot of people are worried about like, the stock market is definitely a concern, both Canada and the US. Like they're concerned about like upcoming recession, right? Like or inflation. Do you see that happening, or you feel like healthcare typically is fairly like recession proof? They might not be growing 20, 30% a year, but like they're not gonna lose their shirts either, right?
Yeah, it's been fairly strong. Like we do see some spending tapering off based on the economic sentiment, but generally, if the practice focuses on like individuals who have like strong health insurance,
Mm,
then they've been okay. And some clinics will be have a large group from one particular industry or company or government area, and they tend to be recession proof. But
mm.
then the other groups who have a little bit mixed bag, they may feel a little bit more. So geography obviously plays a big role into that. If you're out in, let's say, Alberta or somewhere where they're doing tons of layoffs right now, you might be hit by the local economy. But if you're in a bigger city where there's a lot of different factors and industries, then you're okay. But generally, it's been okay. But I do feel that in the last couple of years, people are feeling we're feeling it, especially after COVID. They were feeling a little bit, but now it's a lot more stable.
Yeah, the thing I tell a lot of practice owners is like I think COVID, like before COVID, running a business was really easy. It was very
Yeah.
predictable. Post COVID, there's no like it's I find that like, not only do you have to be at the top of your game, but you also like it's not as predictable as it was before. Like there's just way more like macro risk going on in the world outside of our control as like Canadians or even Americans, right?
Yeah, agreed. And I think that it just goes to like if we made it through COVID, like anyone who made it through COVID and you survived and you still have a shirt on your back, you can do anything, right? Like it was like such a crazy
I
time.
100% agree.
Yeah, yeah. So now it's
Yeah.
like, okay, how can we be innovative in our practices? How can we add more value to our clients, right? And I know it's hard to do that with like a lot of businesses are trying to figure out, okay, how do we add AI into our clinics, our practices, right? And
Mm.
it could be like the reports we give them. It could be, the pre-planning, the post-planning, whatever it is. We just got to figure out how do we add more value than the person next door and like anyone else, and how do we do it effectively and cheaply, and how do we make our staff think about, just constantly adding value and making our clients experience better. So
Yeah.
and
I love
if we're
that.
not innovative, like we're gonna fall behind, and it's all about. It's hard to say how can we be innovative in like maybe a bricks and mortars type of situation, but it's super important to always think about this, whether it's marketing or even automating from like an accounting and tax side.
I think all businesses, if you're not finding ways to like make your business better, you're innovating, and going for those, making for, doing those like small changes that will have like big impact, like your
Yeah,
business, regardless of what industry you're in, whether you're in healthcare, tech, or e-commerce, or even like, we're both in EO, and so we speak with a lot of other entrepreneurs in other industries. Like everyone is going through this thing, and if you got to find a way to like innovate and make your business more profitable and also grow, because if you're not keeping in times with inflation and competition and just all the other macro winds, like heading towards you.
yeah. There's no time to rest.
Yeah.
You always be on your feet, right? That's what it comes down to. Yeah.
Yeah. I'm curious, what would you say, like, like you work with a lot of practice owners, right? What would you say is the top three financial or tax mistakes that you see a lot of like owners make?
Only three?
Sure. Or five, whatever. What's the top ones that you see?
No, I'm joking.
That you're like, what the heck? Why are you even in business? You should stay an associate.
Yeah. I think like at a really basic level, like not understanding numbers, right? Not understanding, okay, what am I actually taking home, right? What am I on an annual basis? So I like to call it like total partner compensation or like total shareholder compensation if you have a corp setup. And really like what's my take home like based on my profit, my salary or dividends, based on all the expenses I'm pushing through the company. How much am I taking home each year? How am I growing? What's my net worth? Like I think that is like super important. People need to understand what that means. And is my net worth increasing each year, or am I just here um, at the clinic making money to pay off my debts, or and I'm not taking much home? So getting an idea of like how we're adding value, because you could be paying your debts and building up a little bit of cash, or you could just taking everything out and spending it all. But if we're not increasing our net worth, that's like becomes a big issue.
And what's your
And then
calculation of net worth for the people who don't know what net worth is, right?
yeah, so net worth would be all of our assets. So let's call that the value of our practice, which is its own calculation.
So you would include that or no?
Yeah, 100%,
Okay.
100%. Because
But
like,
what if you have a startup that has no money? Like, what would you put as your value of your asset? Like your goodwill
yeah,
of how much money you spend for renos?
yeah. So let's say your leaseholds, right? Your leaseholds
Okay.
become your practice value. Like what? So your goodwill or your value of your practice is going to be what someone's willing to pay you for it,
Yeah.
right? So if
Okay.
we say our EBITDA or like our earnings before interest and taxes and amortization is let's say it's 100,000 a year, and we know that in the market we can sell our practice for 3x or 5x that
Yeah.
EBITDA figure, right?
Okay.
10, yeah,
Yeah.
right. So
Let's go for three.
let's go for three, right? Let's be conservative with it. So we know in year one we are 100K profit
Okay.
EBITDA, and then we times it by three. We know our
Okay.
practice is worth 300,000 plus maybe our
Okay.
leasehold, right? So
I
a
love it.
general
Yeah.
framework. But then
Okay.
in year two we get to 150. So we know now we've increased the value of our asset, right?
Yeah.
Of our practice. So
Yeah.
it's increased our net worth.
I like
So,
that. Yeah.
yeah,
Yeah. And maybe you take a trailing like 3 years, right? Whatever the last 3 years, you average it out, and whatever the market rate, whether it's like three times profit or 5 times profit, right? So,
yeah,
right.
yeah, exactly. So I always tell people to understand like how you value your business. If you were to sell
Yeah.
off all your assets, like how much cash would you be left with? Think about it
Yeah.
like that. and pay off all your debt. So, how much equity do you have in your home or a rental
Yeah.
property? How much investments do you have, your RSPs, TFSAs, or
Yeah.
MKs? And then, add them all up, subtract all your debt on those
Yeah.
on those either properties or those businesses.
And corporate debt as well, right?
Yeah,
Like all debt, right? Okay.
yeah,
And then
yeah,
that's your
all of it.
number.
Yeah, and there, yeah.
Yeah.
So that gives you a rough idea. So we know that each year, all the effort and time we're putting in is contributing to increasing our net worth, right? You
Yeah.
want to compare that, like, if I didn't increase my net worth over the last 5 years, why? Why didn't that happen, right?
Yeah.
If I own a practice, does it make sense for me to sell this and go work as an associate, right?
It's
Really
less
want to
stress,
like,
isn't it? Well,
yeah,
if you're a dental associate and you can make like 500K, being a top biller in a big city, why would you even want to own a practice with all the stress?
agreed, agreed. Yeah, yeah. Some people get bored, but it's like, understand what's on the other side of what you're asking, right? Like,
Yeah.
do you want to deal with payroll issues and staff and
Yeah.
all these things that a business owner
Yeah.
has to deal with that are not just practicing your profession?
Yeah. Okay. So knowing your numbers, specifically your net worth, and it sounds like also your a profit and a loss. Like how much money is your business making? How much are you pulling in as well? Like what else is there that you see a lot of people like make mistakes with?
Yeah, the second one would be ignoring or not filing their taxes on time, right? Like thinking of it.
Do people actually do that? Like aren't people usually pretty diligent with filing their taxes?
You'd be surprised. You'd be surprised. I have one dentist right now who hasn't filed for like 7 years. Like, what are you
What?
doing? Why?
But what percent? That's more like 1 out of 10, right? Like is it
Oh,
majority of
like less.
people?
Like one out of
Okay.
like 50. Yeah, like it's very
Okay.
low. But like some people get overwhelmed by it. Some people get anxiety and stress over just thinking about it and they put it off. So
Yeah.
don't put it
That's
off.
valid.
Just figure out a plan. Get at least file it, get it done with, even if you don't have the cash or whatever it may be. But plan for it ahead
Yeah.
of time. I think like even when it comes to installments, in tax installments, or just making
Yeah.
sure that we're keeping the cash away, putting it away every month and having it aside so that when it comes to tax time we're not caught off guard, especially for new practice owners, right? New
Yeah.
practice owners are like, okay, I'm just like trying to make sure can pay my rent and I can pay my staff, but then they forget the year ends up and they've had 200K profit and they forget that they have to pay like 30 grand in tax or whatnot. So
Right.
so just planning for these things that when you're first starting out, obviously more seasoned practice owners, they've been through those struggles, so they know. But
So
yeah,
like what do you do? Like you just set a percent X amount and just like dump it into like a separate like an account or something?
yeah, that's generally the best thing to do is take 10% of your profits and keep them in a separate account on a
Like put it in
monthly
a
or
money
quarterly
market,
basis.
like a money market, like a cash.to type of thing, right? Get like
Yeah,
3%.
yeah,
Yeah.
yeah. Well, for anyone starting out, I definitely do that. In most jurisdictions, you're gonna have to pay installments in your second or third year of business based on your first year's or second year's profit,
Yeah.
anyways. So you're gonna have to
Yeah.
make those monthly payments. But yeah, just don't forget about taxes and
Yeah.
like the government. That's the one. The government's not
I
really
hate
forgiving.
taxes. I pay too much of taxes.
Yeah, exactly.
What is
Yeah.
that?
So how can we
Yeah.
minimize our taxes and but also don't pay any penalties and don't pay any interest by not filing on
Yeah.
time and not paying
Yeah,
your
because
tax?
it's expensive. The interest if you miss your date the dates, it's like almost like it's not worth it.
No, it's like yeah, like in Canada, it's if you're late and you owe tax, it's a 5% penalty the first time plus a 1% penalty per month, and
Yeah.
that's not including any interest. The interest is on
Yeah.
top of that, and it compounds daily. So whatever you owe compounds
That's
daily,
crazy.
so it adds up like crazy. Yeah, and then
Yeah.
the second time it's like 10% penalty plus 2% per month if you're late
Yeah.
on your
And US
filing.
is probably similar as well. Like, they got mechanisms to make you pay.
Yeah,
It's like payday loans.
yeah, yeah.
It
They'll
gets
seize your
incrementally
accounts.
more
Yeah.
expensive.
They'll take money directly out of your account. So you don't want to mess
Yeah.
around with the CRA or the IRS.
Yeah.
Yeah, the penalties themselves, in the States, we see these like non-filing penalties and these
Yeah.
non-reporting penalties that are just like flat, like $5,000 or $10,000, right? And it's just insane. We gotta, yeah, really don't mess around on that side and just make sure you get all of your filings done on time.
Yeah. Yeah.
Mhm.
Yeah. It's interesting. Like, something that I see a lot too is that I think most people actually don't do monthly bookkeeping, right? So they actually don't know what their numbers are until the end of the year, until they talk to a company like yours, like, oh my gosh, like I made money last year, or like I have more money in my bank balance than the previous year. And so something I see a lot in the community is that like, especially when we work with them, they're not used to looking at what their profit and loss statements each month is, right? Right? So they don't know where the expenses are going up or going down, whether like they're even collecting the money that they're billing, or maybe like their staff is stealing some of that money, right? Would you agree?
Yeah, I think if you don't have a pulse on the numbers like consistently throughout the year, you're just setting yourself up for failure. Like myself, even for my own businesses, I'm always like, okay, what are the numbers? Like, what are we doing? How are we looking? Right? And I constantly, I know I was on a call one time with other EOers, and the moderator asked a question like, how many times a day do you check your bank account balance? And the responses were like 5 times a day or 10 times a day, right? So clinic owners, if that's the only way you're checking, you understand what's going on in your business, then you
That's
definitely
scary.
need, yeah, like some sort of financial snapshot
Yeah.
on a regular cadence. Yeah, so like we do is
Is your cadence monthly or quarterly?
yeah, 100% monthly. Yeah,
Okay. Yeah.
yeah, because especially if it's like a shop where you're growing or it's high volume, you can't. You need to know those. You need to know your monthly numbers as a whole, but then also I would even break it down to like looking at within your practice management system your weekly numbers, right? And
Yeah.
like understanding, from a week to week how we're doing, from month to month how we're doing, quarter to quarter. The more information we have, obviously the better, but then you don't want to get overwhelmed by it. So yeah, what we do for most clients, we recommend them to go on like a monthly sort of cadence with their bookkeeping. And like
Yeah.
nowadays it's so easy because you have all these great cloud accounting tools.
Which one do you like? Do you like Zero or do you like QuickBooks Online?
So we're partners for both. We love them both
Okay.
equally.
Okay.
But what I would say, yeah, for the more complex practices, we do use QuickBooks Online quite a bit
Okay.
more. But then we tie
There's
that
probably
in
more
with,
integrations with them, right? With some of these
yeah,
EMRs, because the EMRs are like some of these health EMRs are like a little outdated, so they got very limited integrations, right?
yeah. So we love it for that reason, 100%.
Okay.
Yeah, and then like a receipt management tool is also really important to
Okay.
combine with your accounting software. Yeah, so
Yeah.
like in the last 3-4 years, because of the rise of all these amazing software packages, we've seen a ton of clinics where we're just managing their internal bookkeeping for them on a monthly basis and payroll because it's so easy to do it virtually and remotely now,
Yeah.
and set up like those automations where there's no excuse not to do it because it's just there's so much real time data we can get. And yeah, it's really easy now, and really automating like a lot of that compiling of information. It's so easy to do that I recommend everyone has at least that set up. Like have some bookkeeping software set up, have some reporting on a
What
monthly basis.
percent of people that practice owners you think in the industry, like maybe let's talk focus on the multidisciplinary clinics. What percent do you think of them actually have like monthly P&Ls?
I would say the good ones. Yeah, if I think about it, I would
20/80?
maybe like one third. Yeah,
One third, yeah.
yeah, yeah.
Wow, that's the high side.
Yeah, yeah. I'm being generous. I'm being generous, but
Well,
because
I
like
think the people who work with you is going to be on the one third.
yeah,
But like if you
yeah,
look at the people we work with, I bet you it's like, yeah, it's part. I would say it's 2 out of 10. Right?
yeah. Because when we're working with someone who like they're generally they know what they want. They know that they need they need this reporting.
Yeah,
They're prioritizing these systems. So yeah, and that's the type of client we want to work with too, who understands the value in making sure that you have all the information you need, and they're the ones who are gonna
yeah,
skyrocket their growth. Because like someone who's
yeah,
running a practice and doesn't know their numbers, I don't know what they're running, right? So you have to know your numbers to run a business, or else you're basically walking in the dark, and you're trying to manage in the
yeah.
dark. So yeah, so
I love it. So
yeah, it's
these P and
great.
Ls, like when you look at these profit loss, like what are things that you look at? What's important to you when you look at it, or an owner should look at? Like, and what patterns are you paying attention to?
Yeah, so I think we've actually been working with your team to develop a really cool template for all the practice owners to use, and then internally. Even for our practice, I'll give you an example. We have something called the Fab Five, so 5 metrics that we love looking at on a monthly basis, and I think each practice owner should have this set up as well, where there's different numbers that let's say we're sitting somewhere in the middle of nowhere, and we want to know what's going on with our business. If someone gives us these 5 numbers, we'll know exactly what's going on, and we'll have like the comparatives to understand them. So I would say top line revenue, our
Okay.
total billings, gross billings,
So you're looking
are
at revenue growth, like is that looking at you're looking month to month, quarter to quarter, like are you growing, or are you flat, or just like the numbers itself?
so yeah, at a base level, we want to know the total revenue, and then we obviously will use that to month, quarter to quarter, year to year.
Okay.
So we need to know that number. We need to know our costs of goods sold or our cost of sales or for all of our clinics. So that can include, products, that can include practitioners, right?
Yeah.
Or what we're paying out to our subcontractors and their gross profit, super important, right? Like based on our total revenue and after we pay all of our practitioners, what are we actually taking before our fixed expenses, right? Before our
Yeah.
operating
And
expenses.
I've seen this happen a lot on these P&Ls is that like you end up overpaying people, but you don't see it.
Hmm.
You don't see it until
Yeah.
like months later because you're like, why is it that my gross margins are, 40%? Because really I'm paying everyone 50%, right? So like I'm losing 10% somewhere. Like what happened, right?
Yeah, yeah, and like having that differentiation, especially if you have like let's say full time staff, like are they part of your cost of goods sold? Or are they under operating expenses as like admin salaries, right? So like making sure that you really spend time on that cost of goods sold figure, so you know your gross profit and you know what we're making off of off of each patient visit, and depending on what type of service
Isn't
it
your
is.
cost of goods sold like just like whoever delivered that like service? In this case, if you provided physio, it would be the physio, it would be the physio's wages or whatever fees, and that's your cost of goods, no?
Yeah, yeah, exactly. Yeah, so if we're paying our whole team like you're saying, 50%, but we're seeing our profit at like 20%, that's going to give us an idea. Hey, something's wrong. Like, hey, are we not
Right.
marking up enough, or is there some sort of leakage here that we need to look into? So
They're overbilling, right?
yeah,
We're not collecting it. You're just like paying it out without reconciling their invoices to match the fact that like it matches your revenues, right?
yeah, yeah. There's so many issues we can find with just like those two numbers,
Yeah.
that can tell us like exactly how the clinic is performing and if there's any
Okay, so
specific
gross
issues.
margins, right? Like you're looking
Yeah,
at gross margins percentage, right? Okay.
gross
And the
margin
other one is
percentage.
like revenue, gross margin revenues. And what else is part of the Fab Five?
So then we also look at, so from a profit and loss perspective, then our net profit, obviously, on a monthly basis, just to make sure that we're consistent and obviously some seasonality there. And then the other thing I would even look at is, uh, so for us it's a little bit different, but for some clinics, I like looking at the total new revenue, right? So new patients signed up. So new work, new patients, we keep. So it's not necessarily a profit and loss metric, but a metric to determine
Oh,
net growth.
interesting. So you
Yeah.
put all your consults and your new patient visit revenues, and then you have your call it recurring revenue. So you're
Yeah.
splitting. I've never seen that before. And what do you like about that, Amanda?
So that metric helps us understand the growth, right, in the clinic in terms of our marketing and in terms of our efforts to bring in new patients. So if we're in a growth
Okay.
phase and we're trying to make sure that our marketing efforts and our team are closing new new clients, new patients, that allows us to sort of make sure that it's consistent. And if there's any, let's say, promotions we're doing or any peaks and valleys, understanding how we brought in new clinic, new patients, and what worked and what didn't. So it doesn't have to be, let's just say, new client revenue. We can have a separate metric that's just from the practice management system that's showing how many new clients did we sign up or how many new visits did we have this month that are
Yeah.
new patients, net new patients.
Yeah, and then you could calculate your CAC, right? Your cost of acquisition, right? Like how much
Yeah,
it costs you to acquire that new patient. If you add up all your marketing spend, or your advertisement spend, you divide by the amount of like new patients you have that month or that quarter, then you kind of know, oh, it cost me $100 to get a new patient in the door, but if I'm only billing a patient $600, right? Do
yeah,
those numbers make sense, right?
yeah, exactly. So a lot of value in that. And
Love
then
it.
I would say our overall profit percentage. Right? So we want to make sure, on a year-to-year basis, we're at that like 10 to 20% total net profit percentage.
Yeah,
And if we're not, then where can we cut? Where can we cut expenses, or where can we increase our
yeah,
revenues?
yeah.
Because that's the most, like, one of the most important things in terms of assessing how we're doing, and that's going to play into our ability to sell the clinic, right? So no one wants to buy a clinic with no profit. So
Yeah.
yeah, that
And
number.
also part of your net, part of your, calculating your net worth at the end of the year is like how much profits you have in your business, right? Times
Yeah,
3 or 5, right? So,
yeah, exactly.
yeah,
Yeah, so sometimes if the year goes by, you haven't done any bookkeeping, and you go to your accountant, they do it all at the year end, and you're ready to file your taxes, and you're like, holy crap, I only made 50 grand, or I lost 50 grand. You're
it's too
like,
late.
what happened? Yeah, yeah,
It's
what
too
happened?
late, buddy.
Yeah. And like they're saying like 70-80% of people, that's how they're operating, right? They
Yeah.
don't actually
Yeah.
know. Yeah.
Yeah.
Yeah, and
I
it's
think
yeah.
benchmark is important too, and I think it sounds like you guys do that as well. Like, looking at the percentage of items on your G&A. So in this case, what is your percent of like front desk cost to revenue? What is your percent
Yeah.
of your rent, maybe some of your fixed costs like rent and some of these other like stuff like to revenue, and is that out of whack of like, what the call it what the benchmarks in the industry? Because like maybe you're like, oh my gosh, like for the amount of revenue I'm paying too much rent, right? So maybe in your next lease renewal, like either get a smaller space or like negotiate a better price, so
Yeah. I think understanding what those benchmarks are is super important. Whether you're talking to colleagues or you're doing some research on your own, you can obviously ask your finance team, your accounting team, to give you some insight on those. Not if your firm's not specializing in the space, they may not give you the best insights, but
yeah.
yeah, you definitely want to do some research there. And obviously, you guys have a set list of that, which is really helpful. I would say, like, even when we look at marketing, right? Like, what for a growth clinic, what is a normal marketing budget percentage revenue wise that they should be considering? And it's not based on last year's revenue, it's based on your projected revenue for the new year, right? So
Okay.
making sure we understand the differences there and what's
What
normal.
percentage would you say for it for like a business doing less than around $500,000?
Like if they're focused on growth, then they have to be in the higher percentages. But I would say 3 to 5% of revenues is like typical. If you want to
Yeah.
go growth, you're going to be in the higher end and go even above that 5%.
Yeah.
And for marketing and for advertising spend, it's all about tracking and it's all about making sure that it's an effective use of money because you can throw away money really quick. So
Yes.
we got to make sure that we're getting results from that spend.
Okay. So you're saying a typical clinic does 3 to 5, and then some of these growth clinics, are you seeing them spend like double digits, like 10, 15% type of deal, or?
Sometimes I wouldn't say often. It
Yeah.
just depends on what phase they're in. Obviously, in startup mode, they're going to spend a little bit more,
Yeah.
and then as they get busier, they'll
Well, the
cut
startup,
back.
I don't think you have a choice. You have to do it,
Yeah,
right?
yeah, you have to go hard. Yeah,
It's probably
yeah,
like 50%,
yeah. Depends on their budgets, but
Yeah.
but it's funny. Like some startup clinics are spent like will underspend too, and I always like warn them against that, right? Because
Yeah.
now you spend all this money building everything up, and now you're slowly getting impatience by just like word of mouth and referrals, but like we can't have that. So yeah,
Yeah.
so just whatever campaigns we can use, and making sure that when we're doing our projections and our budgets for the startup clinics, we're putting in like our initial startup advertising spend and then also our monthly recurring advertising spend for the next 12 to 24 months because you
Yeah.
can't just say my build out cost is 150 or 250K and then not include another like 50K or 100K for advertising like or whatever it may be that
Yeah.
you're comfortable spending. Yeah, so I definitely think that people need to consider that because I had one guy the other day who had budgeted everything for the build out, and then his sign was the last thing he had to pay for, which was like 5 grand. And then I was like, "How about your marketing spend?" And he was like, "Oh, I don't have any money left for that." So then I was like, "So how are you planning on getting patients?"
Yeah. You beg. What would you say are reasonable business deductions, that owners could make to pay less taxes, right? Because you probably see this controversy all the time. Everyone's trying to deduct everything, right? What are reasonable business deductions that most practice owners should use?
This is off the record, right?
Well, this is not financial advice. This is experience share, right? Right?
Okay.
Of what you've
Yeah,
seen
no,
and you could.
for sure.
Yeah.
So we tell everyone, the basic way to think about it, and it doesn't matter where you are, is if the expense or if the purchase was incurred with the intention to earn income, then it's deductible for tax purposes, unless like it's specifically prohibited by the Tax Act, right?
Yeah.
So that's very vague, I know, but but we don't
That's
want
so
people to.
subjective, man.
Yeah, exactly. So you don't want people to think that to be scared to deduct expenses, right? Like
Yeah.
that's always my biggest concern is that they're not putting things through their corporation because they're scared they're going to get audited or whatever it may be. Uh, and I would say, if you're using your cell phone for your business, that should be in there. Like it's not a personal
Okay.
expense, it's a business
Yeah.
expense. And then obviously with clinics, you have, we our typical costs are very obvious, right? We
Yeah.
have our rent and our utilities, we have our staff costs, we have our subcontractors and our other clinicians. And then you have, it starts to get subjective when it's like, okay, I'm
What
going
about my
to
home office?
yeah. So there's rules around home office depending on where you are, and but if you're like doing a lot of admin work from home, you're planning from home, you're doing your meetings from home, or like with your team, like you're using your house for your business, right?
Yeah.
So it's about how do you structure it? How are you tying these personal things that where you are doing business work into your taxes?
So do you just take a like if you use like two rooms in your house, like you just take a percentage of like the square footage of what space you use for your office at home? Is that typically like what you
Yeah,
recommend or?
yeah. So we definitely generally will recommend a percentage base of total area for the business use versus total
Yeah.
area of the home.
What's the max you could do? What's the max that you've seen that doesn't like get you in trouble?
Yeah, so assuming they don't live in a tiny condo in downtown
Yeah.
Toronto or Vancouver,
Okay.
we generally tell people not to go over 25%
Okay.
of the total space, just to be
Okay.
safe
That's
and
reasonable.
conservative. Yeah.
Yeah.
And I think, but if you're in a tiny condo where it's like one room or a bachelor, then you have to be a little bit creative in terms of how.
Yeah.
CRA, like the Canada Revenue Agency, they've gone to people's houses and like literally measure the
Really?
square footage. Yeah, yeah, yeah. So it's
But
really
that's
interesting.
only if you exceed the 20%, right? You know, so don't.
Yeah, if you're conservative with it, then it's easier to justify.
Okay.
And yeah, so this is if you have a clinic, then and you're still doing some work from home too, then you want to make sure there's certain tests for each jurisdiction
Okay.
that you gotta be aware of. So as long as you meet those tests, you can do home
What about
office.
car and autos?
Oh
What
yeah,
what's
that's
what's it?
everyone's favorite
Yeah.
one.
Yeah,
Yeah.
yeah.
So
Actually, no, trips is my favorite one. The auto is
oh,
not, but let's talk about autos first, right?
okay, we'll come to trips and we'll come to the fun way to do trips. So for auto, so there's a few ways to do it, right? In Canada, we have the concept of a kilometer reimbursement.
Okay.
So if you own your car personally, but you're using it for business purposes, you can reimburse yourself for each
Oh,
kilometer
that's too
that you
much
use.
work.
Yeah, it's a lot of work. You got to keep track. So under both scenarios, so whether you own a car personally or your business owns the car, you
Okay.
should be tracking kilometers, right? There's a bunch of
Okay.
mileage apps and all this for
Okay.
that. It's tracking like, okay, you're going to see your accountant. If they're virtual, you
How
don't
many
have
people
to.
actually do that?
Hopefully not a lot anymore, but you know what? You'd be surprised. You'd be surprised. Some people
Okay.
like going and hanging out with their accountants because we're that much fun.
Okay. Okay. Well, you
So
seem pretty fun, so I think you're
yeah,
one of the few accountants I would want to hang out with.
I don't know about that. Yeah, I don't know about that. No, none of my clients are asking to hang out with me, so I don't think it works.
Okay. All right.
All right, so we got so that's the one way is mileage reimbursement. It's pretty generous in terms of what they allow here in Canada. So if you're traveling a ton of kilometers, then we're good.
Yeah.
But the other way is to actually have the car owned by your corp or your operating co. And
Yeah.
if that's the case, then all your operating expenses can be pushed through there as well. You still got to figure out like, is there a personal benefit? Is there a personal portion of these vehicle expenses that I'm pushing through, and then take those out of what you're expensing each year. And there's other like specific nuances of like standby charges and operating expense benefits
Yeah.
that like you gotta look into.
Just slap in your logo like on your car, and then it's like a walking billboard. No,
So
doesn't that solve a lot of the trick?
it solves part of it, but I think you still gotta always be conservative and take a small
Okay.
portion for personal use out of those
Okay.
expenses. And then the mileage logs are super important still. I think, and CRA doesn't recognize, and I think the IRS as well, like going to and from your house on a to and from like your practice to your house. So they wouldn't necessarily count that as business use, but if you're going to like in between, you're going to a few places, you're picking up supplies, you're going to the bank,
Okay.
you're doing different things, then that's how you want to sort of justify your travel and your kilometers and your miles.
So you're saying in theory, like if you put the car lease underneath your corp, then you still need to track mileage, but then so this way you could like back out all the personal stuff, right? Is that what I'm hearing?
Exactly, exactly,
Okay.
exactly. So, you can definitely put everything through, but you just want to make sure you're setting yourself up for success.
Yeah.
In case, the government comes asking about these items, and they do get, occasionally it's possible they could get audited. So you
Yeah.
don't want to give them any reason to deny it. So you just want to make sure that you're consistent in how you're reporting it. You have documentation to support it, and you're not being super aggressive with it because they have all the metrics in terms of like per industry group, who's deducting what and what percentage of expenses and revenue they're deducting. So you just want
Yeah.
to make sure that it's in line with the industry.
Yeah. Okay. That makes sense.
Yeah.
What about
Trip,
trips?
trips. Yes, yes, the fun one.
I gotta
So
go to Hawaii to like recruit my next physio. I'm gonna take him there, right?
yeah, it's practice based, right? There's some business component to it.
Yeah.
Uh, It's a business development opportunity, or there's a course you found in Hawaii as well, right?
Yeah.
About how to build a practice. You guys should do your next
I'm gonna do my next meetup in Hawaii, or maybe on
yeah.
a cruise. Give a reason people to spend money on a trip, right?
Yeah, exactly. So if there's a business component to it or a practice component to it, it's like how do you tie that in
Yeah,
to your practice, right? If you're just going to, let's say, Paris for 2 weeks and like you went for like a 1 day public speaking course or a one
yeah,
day business development course, then deducting the whole trip may not necessarily make sense. But if you can structure it around like a conference or a trip around a conference and anything related that can be tied to the business or related to the business, then
yeah,
there's options to deduct the flights and the hotels and all that. But
yeah.
going to a resort in Mexico and just chilling on the beach, it's going to be harder to justify that one.
Do you see a lot of the audits happen because of is it usually travel, like housing, or like the autos? Like, what's the most red flags?
I think it's a combination of things. And each year we've seen specific programs that the government is putting through where they're focusing on like a line item. So one year it
Okay,
might be professional fees. The
okay,
next year it might be travel and vehicle. And the next year
okay.
it might be what's another good one they like meals and
Interesting.
entertainment. Yeah, right. So I think that internally the governments have their own programs that they're running based on like industry
Mm,
groups, and if they're seeing abuse in a specific area, they'll audit that. So right now we're not seeing anything too aggressive. You're seeing it in different areas like less grants and less let's say other tax credits that they're not being as friendly on. Specifically for the clinics, yeah, the travel and the vehicle expenses are not travel but vehicle expenses more so. That's why I'm telling everyone just to make sure you tighten up how you're documenting everything. And then I think down the road, as the governments have less and less money, they're going to get a little bit more expensive with their audit. Sorry, a little bit
yeah.
more extensive in terms of their audits and what they want to come after.
Sounds like
So
it's
I would,
random.
yeah, yeah, and it's like there's other things too. Like let's say if someone's registered for HST, right, and they're not making their HST payments, or not filing their HST, then those sort of things trigger audits too, like not non-compliance
Hmm.
and not
Yeah.
filing. And then also I would say like with the multidisciplinary clinics and the sales tax, that becomes sort of the biggest issue for audits too, right? Like what percentage of our ITCs or our HST paid, our sales tax paid, are we claiming, and is it in line with like our revenues, and just making sure we're doing that
Oh, I
consistently
see.
year over year. So that
Yeah.
for allied health professionals, for multidisciplinary clinics, that's usually the biggest issue.
It's mostly for massage anyways, right? Or maybe
Yeah,
mental health, right? Like the physios and chiros are they're HST exempt, are they not?
yeah. So it's like
Okay.
that. Like usually it's a smaller portion of revenue that we're collecting the sales tax on.
Right.
But then what happens is that people may be claiming all of the HST paid on their expenses,
I see.
where
Yeah.
the CRA sometimes like, no, sorry, we want you to keep it in the same percentage as
Yeah.
your revenue proportion to your total revenue, massage
Okay.
revenue to your total revenue.
Cool. Hey, how you doing for time? You got another 10 or we just wrap up or
Yeah, yeah, I'm good.
okay.
Mhm.
Another hour or another 10? Just joking. Another 10. No, this is good. I'm really enjoying this, right? I love how we're just I feel like you're in my EO form already. We're just chatting about like all this like random stuff. Okay, so all right. So what do you what's some of the smartest ways to get funding to start a practice right now?
Oh yeah, that's a good question. I would say, at a base level, you want to have some cash saved up yourself. Obviously, you don't want to go into it with no cash personally. So you need to have a base level saved up yourself. But there's a great programs available through most of the chartered banks where they'll help fund, different parts of the clinic build out. In Canada, the Canadian Small Business Financing Loan, or CFPSL, I think it's called. That's a really good option. And the best part about that is it's only 25% personally guaranteed. I think it's a total of about 500K people can get. So
And what will they
that's
fund? Just the equipment and the build out too, or
build out
like
an equipment, yeah. And then I think there's 150 for
okay.
working capital as well that they can get
Oh,
access
no
to.
way, really?
Yeah,
And then you're only on the hook for 25%?
yeah, yeah. So that's
Okay.
great. So worst case scenario, things don't work out, sell the equipment,
And is
and
that hard? Is that hard to get typically?
no, it's not that hard. You just got to make sure, like, there is a process to it. You obviously have to have a good business plan,
Yeah.
projections in place. That they're going to look at your personal profile. You have to have at least the 125K net worth. So
Okay.
if you have zero net worth, then you probably can't do that option.
Okay. So
But you
minimum
can,
125,000 net worth, right? So
yeah,
okay.
yeah, yeah, yeah.
And does your company help with that process too? Like, do you, or is
Y-
that
y-
like,
Yeah, yeah, we can help with it and, get them off the ground and just get everything ready. But, the most important thing is just having a strong relationship with the bank and
okay,
making sure that, we're checking all their boxes and everything
okay.
is set up the way they want to see it, right? Because, like,
Which
you
bank
don't
is the
want to
most
go,
generous? What have you seen is the bank is the most lenient with getting these loans? Is it
you,
Scotia?
you know what? It's a combination because each of the banks have their own programs
Okay,
for the different groups. So like they'll have specific industry programs. BMO was aggressive last year. Scotia's been better
okay,
this year. RBC is pretty good usually too. So it's a common. It just
okay,
depends. Like every year,
okay,
it's like depends on who feels the most competitive and like
okay.
who's approving the most. But yeah, it does change up a little
And I
bit.
think typically they like working with healthcare professionals, like especially dentists too, because they know that there is like they're billers, and there's a need for it, right? So
Yeah, yeah. So the different, so we work with the healthcare banking at most of the major banks. Like we have
okay,
direct relationships with them. So dentists and doctors, they have very strong programs for them. Where if they want to buy a clinic or if they want to build out a clinic from scratch, they get 100% financing on all of it. And or even if they want to buy a building that they're going to use at least 50% of the square footage for their practice, they're leaving 100% financing on the building too. So
okay.
for dentists and doctors, they have amazing programs. Pharmacists have some pretty decent programs too. And then for the physio,
Physio,
chiro,
chiro, yeah.
yeah, their programs are a little bit different. They don't go as high, but they do basically have programs specifically for them as well. It's not going to be through their healthcare banking. It's going to be through a different department. They do
But
have
it's
options for them as well.
it's still that 500,000 that you talked about, right? If you have 125,000 net worth, right, you'll be
Yeah,
eligible for that 500,000.
yeah, that's open to anyone. It's not specifically for, let's say, healthcare practitioners, but it is a great program that is out there. So the other programs, they're a little bit more generous in terms of how much people have to put in, but they're 100% uh, guaranteed, person guaranteed. So these programs are better. Like the CFPSL is better because it's less person guaranteed.
Okay. Is there anything other programs that you would recommend for maybe someone who doesn't have 125,000 of net worth? Because I'm 3 years out of school.
It's a little bit harder. I would say, you have to bootstrap in those instances, family and friends.
Yeah.
You got to
Okay.
look at the different options out there. There's not a lot of grants available for, our type of businesses like allied health care professionals,
Okay.
but you want to be creative about how you're getting involved, right? Like it's, can you sort of partner with someone and use their space to start out and then build up that way?
Yeah. Or maybe
Can you,
partner someone who has 125,000 in
there you
net
go.
worth. What do you think about that one?
Exactly. Can your siblings or your parents sign with you, co-sign with you, things like that, right?
Yeah. Yeah. Actually, that's a good point too, because you could probably like if you co-sign, you could probably get that one. You could easily get the 125. Beg and borrow
Yeah.
from your parents, right?
Yeah, yeah. It's
Yeah.
either do you buy a house or do you buy a clinic. You gotta
Yeah.
decide which one to start with. But yeah. So there's
Interesting.
options. There's grants too. So there's like some grants that are that can come down along the road. So let's say there could be like co-op hiring grants
Mm.
where you get like X percentage, like 30% back from the government. There could be
Yeah.
summer jobs, Canada Summer
Yeah.
Jobs Program where you get like
And this
six
was
months.
that digital agency. There's that digital marketing
Yeah,
grants.
the
Like
CDAP
build your
one.
website. Yeah.
Yeah,
Yeah.
CDAP is like 2,500 bucks.
Yeah.
So there are like smaller grants you can get that might add up to like 10, 20K, which like could be a decent amount for someone starting to
Yeah.
practice. So yeah, just being aware of those and understanding what's out there.
So does it make sense to buy a practice then? Because if you buy a practice that actually has cash flow and it has like EBITDA, let's just say you have no net worth, are the banks, what have you seen like they're more likely to fund that, and what have you seen?
Yeah, the banks will be happy to lend on a business that has profit and cash flow for sure.
Yeah.
Now the question becomes like, can you rely on that information the seller is giving you, right? And like, do they have strong financial records? And how
Yeah.
do we sort of assess that information? So I think it's definitely a good option. Build versus buy, they call it, is always the business owner or entrepreneur's number one sort of question. Like, do I
Mm.
build it out myself or can I just buy it? And what is the difference in cost over like 5 years, 10 years? So yeah, so it's a great option. I think that to avoid, startup headaches and the headaches of like knowing how quickly you're going to build up your practice and how quickly customers are going to come. I think buying is a great option, and especially for people who want to scale too, right? You may
Yeah.
want to
There's
buy
tons
like
of clinics that are doing $300,000 a year that don't make money, right?
yeah,
How long would it take you to build to build your
yeah.
practice to build $300,000, right? No?
Yeah, yeah. So yeah, like I think yeah, like what are you seeing? Like what do you recommend to people too who are like just starting? Yeah, do you prefer they build or do you think
Well,
buying is a good option?
I'm biased because like I've always bought businesses and make them better. Outside of these two startups I've done, it's just a lot of work to start a business. And the only way I would start a new practice is if I know from day one I'm guaranteed like new patients, right? So if I have a
Mhm.
relation with the doctors, if I know I have a flood of new patients where I just have to open and like I know I'm going to hit my 500,000 or a million in the first year, I would build from scratch. Outside of that, I would rather just buy a practice that has cash flow, and
Mhm.
if it doesn't make a lot of profit, I know that I can implement like my marketing systems or just like recruitment systems or operation systems and just like, make the EBITDA better, but at least I'm not wasting like 2, 3 years to break even, right? That's kind of
Yeah,
like my take, right?
yeah, agreed. Yeah, like even for myself personally, like we built up like the firm and the marketing side and all these different businesses, and it's been like 15 years that we've been in this practice, and we've done decent. So I can't complain, but it takes a while to build up, right? And now when I'm looking at the next stage of our business, and I advise this to a lot of my clients too, it's like to really take it to the next level, to scale and to get to that next step. Acquisitions and like M&A is like a super important part of the entrepreneur journey and the business person's journey.
Yeah.
And yeah, like you've obviously done it a million times. I'm preaching to the choir here. Did you ever meet Warren Rustan from
Oh,
Arizona? He's a CEO guru.
I remember him. Yeah, he
Yeah,
did a talk. Yeah, yeah, yeah.
yeah.
I remember him,
So
Warren.
so we went to see Warren earlier this year, and Warren's exited like 17 times. All he does is
Crazy. Yeah.
yeah, like find industries that they like and go and build up the teams and just acquire, acquire,
Yeah.
acquire, and exit in like 3, 4, 5 years. And like I don't even know how many billions he's made. It's crazy, but
Yeah.
yeah, like but he has a formula, right? And it's like
Yeah.
basically copy paste. It doesn't matter what
Yeah.
industry it is, and it's brilliant. And I think that no matter where we're at in our entrepreneurial journey, I think it's a significant option that a lot of people get scared of. But I think it's
And I
like
think the banks will finance that too. You have a higher likelihood of them giving you money on a business that has cash flow and profits than you do in a startup, which is, like there's a lot of startup risk, right? Even if you're in
yeah.
healthcare, right?
Yeah, yeah. At least if you're buying something, you know that the revenue is there. You know that
Yeah.
hopefully you can verify that it's consistent and there's no issues. And then
Yeah.
really you're not worried as much about getting patients through the door. You're more worried about optimizing, learning their processes, and paying down your debt, right? So it's
Yeah.
yeah, as long as so the way I always tell everyone, and when we're doing projections and what the bank's looking for is as long as the cash flow from that business can service the debt, plus a little bit, then the bank's happy and they'll finance it, right?
Yeah.
So you got to
So
look
what
at what
have you seen for
the
financing buying a clinic that is let's just say it makes $100,000 of like profit. What
Mhm.
and let's just say they're being sold for three times like 300,000. Like how much have you seen? And let's also assume that this person is credit worthy as well,
Yeah.
right? Okay.
they,
And
they
they could
haven't
jump
filed for
right in
bankruptcy.
and then actually take over the caseload of the owner so they got personal wages. Like what have you seen them finance a deal like this?
Yeah, so I've seen anywhere from 65% to 105%.
Okay.
And you're gonna ask how who financed 105%. So BDC, so the Business Development Bank of Canada, have some really good programs
Okay.
where they'll finance the whole practice, but the only caveat is their rates that they charge are higher, their interest rates are higher,
Yeah.
but their payment terms are more flexible. So
Mm.
it's cost benefit. So if you don't have any cash at all, that's an option. But everyone wants strong financials.
Yeah.
Everyone wants like really good records and bookkeeping, and you can't have Joe Blow accountant doing your statements and not
Your office manager
no,
or the front desk, right?
yeah, yeah, yeah. Like you want CPA, sort of like a professional accountant, signed financials, these sort of things. So as long as those are set up well, you have good projections, you have a good business plan, you have decent credit and decent income last couple of years on your notice of assessments,
Yeah.
the banks will not give you a hard time. Like you'll have options to get financing for your clinics.
Yeah.
And
100%.
yeah, yeah. And I think that whether it's Canada or the US, there's a ton of options in terms of financing. I think in the
Yeah.
US, they probably have more options than we do up here.
Oh, there's way more for sure.
yeah, they
And
like
here's a thing with the cost of inflation and how much like costs of inflation, cost of how much wages are for trades, it is expensive building a practice, So if you're
yeah
building a practice at 150 bucks a square foot, which is, like it's not fancy, and you're building something that is, let's just say, 1,000 square feet, that's $150,000. You can buy a practice for $150,000, right? That
yeah
has a
I
caseload, right?
Yeah, I agree. Like if it's there's reasons to go to both, but I think that if they're especially now with like all the baby boomers retiring, there's a huge opportunity. And even ourselves, like I've had two or three of our clients in the last year themselves just like sell their practice, and because they're retiring and they're ready to move on. And
Yeah.
we see it every day. And as long as you're with the right team, like I know you guys do a phenomenal job with the practice sales and connecting the buyers and the sellers. And I think, and you guys do a great job in getting them ready for sale, like putting systems in place and making sure that it's
And the books
actually,
and the finance, because that is the most important piece. None of these deals go through if you don't have like a good financial record. I'm telling
yeah,
you that.
yeah.
So,
Like
yeah,
I think you guys de-risk it for a lot of people, which is phenomenal, right?
yeah,
Because if you have someone who's just like a sole practice owner and they have their own systems, the way they do things, it could still be a great opportunity to add
yeah,
value. But I think because you guys are involved with so many of these practices and you guys help people de-risk and like get their systems set up, their finances set up
yeah.
properly, man, I think it's a ton of value for people. Like it takes away so many risks for them. So that's phenomenal.
Yeah. We just helped sell like a clinic group for what is it? I think believe it was $9 million, right?
Nice.
And that deal closed within 5 months, right, through due diligence. And that's like a lot of money for someone to cut
Yeah.
a check for. And this is a small business, right? And the only reason, the single determinant factor, the reason why they closed so quickly and they gave you such a big high check was their confidence in the financial records. So when
Yeah.
they look at their P&Ls, they look at their balance sheets, they're looking at their monthly P&Ls, right? Like it is so clean and transparent, and it matches all the data that comes from all their other sources. Like, for example, these being put all their weekly metrics on their scoreboard, or maybe the stuff from their
Yeah.
EMR. And so, like, I can't reiterate how important it is to actually run a really tight ship on your finances, right? Because without that, like you like forget about you making more money, but for whatever reason you might have to sell one day, you can't sell it quickly as well, right?
Yeah, I was like laughing inside when you said the financials match everything else. Because you have people who will like try to sell a practice where their revenue shows 100,000 for the month, but only like 20K came into the bank.
Yeah,
What happened? What's the disconnect here?
yeah, yeah,
Yeah,
yeah.
so
No,
it's super important. I think like I
yeah,
think it's so I guess like just basic for us, making sure that your numbers are good is so important.
yeah. This is important too, right? So cool. Well, thanks for your time, man. How do people find out more about working with you guys and what you guys do?
Yeah, for sure. They can schedule a call with us on our website. So it's srjca.com. So Sam, Ryan, John, Charlie, Apple.com. It's a nice fun name. And yeah, happy to like have a consult with anyone who has any questions. Like we have an amazing team. We have people all over Canada. And then we do a lot of work for bookkeeping work for a lot of US entities as well. And yeah, so like we're always
And you
available.
guys specialize in healthcare practices, right? That's kind of
Yeah,
your jam, right?
yeah,
Working with
yeah. So
hundreds and thousands, right? So
we probably we have a few hundred. I don't even know at
yeah,
this point. We have a few. I should know my numbers better. At least a few hundred, like three to
yeah,
500 different practitioners and clinics that we work with.
yeah,
Yeah, and like size wise, they all vary as well. Because we're sort of focused on anyone from startup to growth to exit, and helping
yeah.
them get there.
Is it
Yeah,
is it pretty equal from startup to like to do in the middle to them?
Yeah, yeah. Like we have people right out of school all the way to like help them when they're starting the clinics to when
Okay,
they're in
I
growth
love it.
phase and acquiring and selling, like all of
Well,
it. So,
here's a thing that I worked with a lot of shitty bookkeeping and accounting firms over the years. I just want to put my hands up. It's hard when you work with a firm that doesn't understand your industry and the
mm,
nuances, especially that those like god damn it like tax questions like the HST, and then like they think it applies to everything, but it won't apply to these things, and then like yeah, I've just seen too much nightmares when you work with firms that don't specialize in healthcare because it is a very different beast, right? So
Yeah, I always tell everyone like build long-term relationships, build people who specialize in what you're doing, and then it's going to save you so much time and so much money and open up so many doors. So like your professional team, your accountants, your lawyers, your bankers, they're going to be the ones that can help, push you to that next level. And if you have a shitty team, it's going to definitely break things quicker. And if you have a good team, it's going to help you get to that next level quicker.
Okay, amazing. Thanks for coming to the show, bud.
Appreciate it. Thanks for your time and thanks for having me.